Hi, I'm Ed Alexander, business attorney and founder of Alexander Abramson. Welcome back to our video series on partnership and partnership agreements. In this video, we're going to talk about the 5149 partnership. All right, so in a 5149 partnership, it's important to remember that in most business organizations, whether that be a corporation or LLC or partnership, decisions are made by the majority, right? And so when we have a situation where the owners are voting, the owner that holds 50% plus one, right? And that could be 50.1%, or it could be 51%, just the majority interest, controls almost all, if not all, of the decisions that are made. And so while it can appear to the outside world that there are two partners in the business, from a control perspective, there is only one partner in the business. And so the partner that holds 49%, the minority interest partner, basically is at the mercy of the controlling partner. And this happens over and over again. We've seen this so many times over so many years where the minority interest partner will come in and will complain. Hey, the majority's hiring their son for a no-show job and paying money. They went out and they bought themselves a luxury car and they're driving around in a luxury car on behalf of the business. Various other, they changed the compensation model. In some cases, they've even fired the 49% owner from the business and they're no longer able to work in the business. And unless that 51% partner, the majority partner, is doing something to breach their duty, right, breach a fiduciary duty or some other duty that's set up, there's limited amounts that can be done to really protect that minority interest partner. And in this case, if you are going to own a minority interest in any business, a partnership agreement is essential to what you have. Now, there's one special case where owning a minority interest can have a really negative tax effect for you. If the entity is taxed as what's known as a pass-through tax entity, so an S corp or a partnership, that means that the owners get K1 statements. They basically are told what percentage of the income of the business they have to pay. They have to pay the taxes on that income. Now, interestingly enough, and this is an area where people are terribly confused, the corporation or the LLC does not have to give the owners any cash. It only has to give them the K1 statement. And then the owner is required to pay those taxes. So they might have to go and dip into their own bank account for the funds to pay those taxes. And this is especially the case if, say, the majority who is working in the business and maybe has terminated the 49% shareholder, then gives themselves a bonus. And that bonus they use to pay their taxes, but they don't make a distribution to the shareholders or to the members that would get the minority interest partner enough money to pay the taxes. And so the minority interest partner is now faced with digging into their own bank account to pay the taxes on the net income of the business. This can be disastrous. A CPA friend of mine calls this K1 revenge. And oftentimes it's used to get rid of minority interest partners because after a few years of receiving these tax bills with no money to pay the taxes, the minority interest partner is saying, I'm done, I'm ready to leave, I just want to be out of this thing. And so they give up their interest for little or no compensation. So if you own a minority interest or are going to own a minority interest in a company, and by the way, that includes if you own a third of a three-party partnership where each of them owns a third, a third, a third. If you own a minority interest in a business, you absolutely, positively need a partnership agreement in place. If you're planning a new business partnership, or if you have an existing partnership and don't have a partnership agreement or haven't reviewed that partnership agreement in a long time, call or email us to set up your partnership design session. We'll walk you through these 21 areas and set up a comprehensive partnership agreement that works for your business and that will enhance its value. Thanks for watching.